Greetings, YouTube friends. Markets are entering June at an important inflection point. On one side, we have record highs in the US equity markets, and on the other side, we have inflation pressure, elevated energy risk, a weakening Bitcoin chart, and a Federal Reserve heading into a pivotal meeting under new leadership. Welcome to the Astro TA Macro June episode. Blair, Dale, and I are going to look at whether June is going to bring continuation, rotation, or a deeper change in trend. Welcome, guys.
Hi, Margo.
Hey, Margo.
Hi, everyone.
Well, here we are at June. May presented us with just a little bit of volatility in the U.S. equity markets before we carried on to new highs. And here we are, sitting near record highs in the U.S. equity markets in the beginning of June.
Well, I want to talk about the sleeper that we identified near the end of last month's show. And I brought up natural gas because I didn't know what to do with crude, and I saw a technical formation developing. And then Blair came in and he had something on natural gas. And I believe the quote was, buy a fib retracement of the first rally for a right shoulder and put stops under the low. And that turned out to be really, precise timing. And we've had a pretty good move from 240 to 330 on its way to $4. And I think it's embryonic. I mean, everyone's talking about electricity. How are they going to get it? They're not going to have nuclear in time. Nat gas has to be the bridge. So it kind of reminds me of the wheat chart before it took off. Same type of weekly action.
Yeah, I totally agree with that. And, I was picking nat gas up on the cycle lows too. I remember we even talked about it in your Discord room there too, Dale.
Yeah. You came in because I was frustrated with Boyle.
Yeah.
Because it was just eroding and it was like a different chart. But, this was a pullback that we talked about.
Yep.
A little further, move us out of the way. So this was the bottom and this was the pullback. And Blair had some type of cycle due there. Mm-hmm. And look, then we had the breakout. Then we tested the breakout once, twice, and we're accelerating. We had a little profit taking and looks like it's ready to go again.
Yep.
All you need is one of these a month, maybe even a quarter. It really only takes one. We talk about everything, but, really only takes one.
Yeah, it is. It's really about identifying those high confluence setups. That's really, I think I actually retweeted something that I can't remember who it was on X, but he said something to the effect of, would you tell your mother or your grandmother or your grandfather about this trade setup? If not, don't trade it.
Okay.
So
he doesn't know anything about suitability. Okay, what are you going to do? I mean, they do call it the widowmaker.
Yeah.
So if it does that to young husbands, what would it do to grandparents?
Well, as we move into June, if we look forward to some of the key dates that we've got coming up this month, there's a couple things that I'll highlight. Actually, I'm going to highlight three things because if people want a more comprehensive astro outlook, I do a full month analysis in my Discord. So, but for our purposes here, there are three major dates that I'm going to throw out. One of them is June 12th. And that is going to be when Uranus is square the nodes. And then the next date,
Isn't that the SpaceX IPO too, Margo?
It is. And you just can't make this stuff up, man. I tell you, we were talking about, so in my Discord, we have this little, just discourse going on where we have been forecasting key dates for events to happen. And I had been saying that Uranus square the nodes between Uranus square the nodes and between roughly the 4th of July were my prime targets for the SpaceX IPO. And when that came out, I was like, you can't make that up. Uranus is the planet, for anybody who is not familiar with astro. Uranus is the planet of technology, disruptive technology and innovation, right? So, the SpaceX IPO, when Uranus is squaring the nodes, and the nodes of the moon from an interpretive standpoint they're very fated points on the chart. And whenever you get Uranus at the squaring of the nodes, you tend to see these really major events, whether they're natural disasters, fires, earthquakes, major geopolitical events like wars and whatnot, or the SpaceX IPO in the financial world, right? Something that's really disruptive technology. I did a whole line of research on the Uranus square the nodes going all the way back to 1900 and posted it in the Discord. And the number one correlation really is with natural disasters. So not to be the harbinger of doom and gloom.
Okay. Well, Blue Origin blew up a while ago. Everyone's pretty confident about this IPO. I've seen so many IPOs end up being, the high the move. I think that if someone wants to buy it, really you're just providing the exit for the billionaires to get liquid for the company. Sure. And let's see, give it a few weeks. Forget about FOMO.
Yeah.
I just, a lot of people have been waiting for this IPO to think the market would top on this IPO.
Yeah, I've heard that. And I'm not, I wouldn't be surprised. And then now I heard that we've got Anthropic is going to IPO, and it's just starting a whole wave of things. So the 12th, and then on the 19th, we have an asteroid named Chiron, for anybody who is not familiar. And the Chiron asteroid, its interpretive meaning is it represents your core wounds. And it can be collective or it can be personal. And Chiron is making its first ingress into the sign of Taurus. And Taurus is the sign that rules earth-based resources, primarily, among other things. And I did a brief on this actually earlier in the year. I remember I shared it with Dale and with my Discord, and I believe with Blair as well. And I identified that there's a major connection to food shortages during Chiron transiting the sign of Taurus. That doesn't necessarily mean that it's going to happen on June 19th, because on June 19th is the first moment that Chiron will make its ingress into Taurus. It'll stay there till September, and then it'll head back into Aries for a little while. And then in I don't have the exact date, but in 2027, it heads back into Taurus. And so we're getting what I call like a foreshadowing or a preview. And so, ag stocks and food stocks are really on my radar right now. And we can talk more about that too, as we kind of unpack that.
So you're looking for the cycles to come in before July. Could it be around the solstice then?
Cycle lows.
Because we've already had a big break in grains.
Yeah.
And DBA.
I am actually looking for the 20-week cycle low on wheat to come in aligned with the solstice plus or minus 1 week. Yeah. Okay. Here, I can actually show you guys. Since we're talking about that.
Look how cheap they got. That was a great, you helped me with my exit near the highs.
Yeah. I know. And it's funny because it went on and it kept going up there for a minute. And I was like, well, I could have been wrong, but I'm going to sit tight with my analysis, which I'm getting better and better at the older I get, the longer I do it. And it worked out. It was exactly right. So check it out. This is our analog here. And the analog suggests that we're looking for our pivot low either next week or the week after. Yeah. And so the solstices are two different things. They are effectively the sun at minimum or maximum declination, depending on whether it's the, winter or summer solstice. And of course, that then depends on which hemisphere of the world you're in. And then it's also, so we're talking about the summer solstice in the northern hemisphere right now is going to be the sun at maximum northern declination. And then it's also going to be the sun making its longitudinal ingress into the sign of Cancer. And that's going to take place on the 20th and the 21st of June. And if you look, wheat has a huge correlation and pattern to making major weekly pivots around the solstices. Okay. So that is a real top watch for me right now.
Well, I've seen reports that the western wheat belt is decimated.
Mm-hmm.
They don't have any water. In fact, the whole country is in a drought, going into a super El Nino.
Yeah.
So
well,
even the farmers that have irrigation, they're running out of the water that they irrigate with, and they actually have to go into their fresh water system. They're running out of water. The wheat crop is going to be no crop, really. At least here in the U.S.
That's an interesting trade idea that I hadn't really thought of, but there are some water ETFs. I haven't looked at them. I didn't prepare it for today's talk, but it's a thing to consider when we're talking about this. Let's see if I can find. I think it's PHO is the water. Let's see. Yeah, that's the Invesco Water Resource ETF. Okay.
That's a nice pullback.
Yeah, that's interesting. That's the weekly chart right there.
Yeah. It's probably about 61.8 back at that.
I was just going to say, if you run a fib off that, I bet.
And maybe you get a little 3 drive. We've had 2.
Yeah. Look,
that's right there at 61.8.
We're right at this golden pocket. That's an interesting emergent idea right there. Yeah.
Makes me thirsty just looking at it. Oh, l'chaim.
I love it. Yeah, and then sugarcane. That's the other one that we've been keeping an eye on. Dale had a great trade off that low. The thing to keep in mind, though, for people there, I will throw a couple of thoughts out here on ag stocks, particularly because my idea is kind of a longer term trade idea on the what we're calling this embryonic bull market, but the thing to keep in mind is that these ETFs are based on futures, and you do have a thing called contango risk if you're holding them long term. So you have to think about that and couple that information with the fact that ag is insanely erratic. Like, look at this. I mean, straight up, straight back down, and that's not uncommon. In wheat has similar behavior. So. I thought
there's a shot sugar may try one more low for a 3.
I would love that.
Too.
But I'm not totally convinced it's going to happen because I think sugar might go first, actually.
Okay.
So we'll see. We'll see about that.
Yeah.
Sugar, I was doing some research on food shortages, and sugar actually seems to show up first as one of the first shortages, sugar and rice. Actually,
well, that same report said we grow sugar beets here in the U.S.
Yeah,
there are none. That crop is not a crop.
I didn't know that.
Says old sugar beet crop in the U.S.
Fascinating.
Back to wheat. One other factor is that a lot of decisions on what to plant were being made in the middle of the Iran war, and natural gas and thereby fertilizer was pretty costly. So I think farmers dialed back a lot of acreage, a lot of wheat acreage because of that, because it's very nitrogen intensive.
Mm-hmm.
So you've got that compounding effect of fewer acres planted and very dry conditions. So that really is yet to show up in price. I think there was one spike up there related to a news report. But I think there's
it rallied 30% off the low.
Yeah.
The next rally, if it's a 3, is going to be 1.618 of what we just saw.
Mm-hmm.
So the third wave or whatever, the first wave, then the pullback, and then the next wave is usually, I like to go look for 1.618 of the first move because I consider that the longest wave and the money wave.
Yeah, it's notable that that we are at the 61.8% right now. But also the other thing, I guess, just to keep in mind, and it's not necessarily my bias, but you know, you would have to pay attention here. If we hold this low here at, let's see, that low is at 575. If we hold that low and we come up, you know, there's the risk of a right shoulder, of course, to keep in mind. But something notable for anybody who runs their own cycles is that ever since this low back here, this first low, we has been running a 57-day cycle, plus or minus 10 days. So we've got that low for the 57-day cycle comes in June 29th, which is, you know, just 9 days after the solstice. And I'm inclined to think it's going to be short and it's going to come in closer to the solstice around the 20th or the 21st. All right. Well, that is the story, the kind of long running story, and that's something for people who are newer here with us. We'll be tracking ag regularly because I think that's gonna end up being a prime topic over the next few years. And then the last event that I was gonna mention, it was the solstice, and I already mentioned it. And that's taking place around the 20th. Jarrid, you have some macro data that lines up with some of these events too, don't you?
Yeah, the week of Monday, June 15th is a big week. So obviously the solstice comes the Saturday after that week. But really, yeah, that week of the 15th to the 19th has a lot of events that could end up being triggers. To start, Tuesday, it's Monday night US, Tuesday morning in Asia. You're going to have the Bank of Japan give a rate decision. It's one of the few times that the Bank of Japan goes before the FOMC. So that Wednesday on the 17th, we have FOMC. That's obviously very important because it's going to be Kevin Warsh's first press conference. So what is he going to say? How is he going to set the table for the new chair? What will the votes look like? How many dissenting votes? A lot of questions, obviously. And then the backdrop is the market has moved to a potential rate hike by the FOMC, given sticky inflation due to higher energy costs as a result of the Iran war in the Middle East and oil. So again, just a lot of questions marked. But then on top of that, BOJ is going to go before them. Japan, has been in a bit of trouble. They've been in the yen market intervening already a couple times. What are they going to do? Yeah, with very little effect.
Right?
Yeah, I mean, we're sitting right back at 160, so they haven't really been able to do much to strengthen the yen. So again, is this a live meeting for a hike by Bank of Japan? We could rewind back to the summer, August 2024.
Yeah.
That was a case where they hiked. The FOMC Fed was expected to cut. Fed did nothing, and then you had a big fallout with the yen carry trade unwind. So I'm, not to say that that's what's going to happen, but similar setup here. Bank of Japan, FOMC in that week. And then also Friday is a U.S. stock market holiday. So Friday the 19th, U.S. stock market will be closed for the Juneteenth holiday. And that is also U.S. stock option expiration day, which means everything gets piled into Thursday. The day after FOMC is where you're going to get the last trading for the June options expiration. And I mean, if you track options, every option expiration is now the largest ever. It's also June. So at the end of the month, we're going to get quarterly options expiration, which are very important for your large institutional funds. But June in the just the monthly option expiration are also important. So Bank of Japan, FOMC, holiday shortened week, option expiration, and then that weekend you get the solstice, could set up as a potential market pivot.
Yeah, I think there's a very high probability chance of that. There's also a heliocentric aspect that I track, which is when heliocentric Mars makes an ingress into the sign of Taurus. And that also is taking place. I believe it's on the 20th. Let me double check that. It's either the 20th or the 22nd. Let me confirm. Yeah, it's the 20th. So that's a hotbed of activity right there for sure. Blair, what do you got your eyes on? Uh-oh, I can't hear you.
You're muted, Blair.
All right.
There we
I'm
go.
muted now. That week is also a peak in the speed index.
Oh.
So looking at the speed of the inner planets geocentrically plus the moon. So yeah, that's there's lots going on, man. Well, you know, I'm looking at the usual planetary lines, and let me just start by looping back to what Dale led off with on natural gas. You know, you mentioned the cycle work that I did at the end of last month's presentation. So let's just take a look at that. All right, so my method is actually very mechanical. So it all comes back to what is happening in the sky on the date at the moment of first trade. So we're using UNG here, and this is the state of the sky at that moment. And you'll notice that we've got Mars conjunct Neptune. So this is pretty interesting. We've got a lot of slow planets engaged at that moment, and slow planets are both boring because they're slow, but also very powerful because they create very strong planetary lines. So if we go over to TradingView and see, here's our Mars Neptune. Here's our Mars Neptune planetary line right here. And this is the cycle that I was talking about, Dale, the cycle reset on natural gas. Okay, so this is a daily chart. We're looking at back on May 5th, that cycle reset. And here's the Saturn Helio line providing some very nice support here. This was the trade you're talking about, like going from, you know, 2.8 or so up to 3.36, 3.4. Right. So this is often where you'll see those kinds of inflection points at those cycle resets of important planet pairs. So the important thing to note here is that this isn't trial and error, right? I'm not just like guessing at which planets matter for which stocks. It's kind of baked into the DNA of these symbols. So once we expose that and make it transparent and throw it on a chart, then we can make some good decisions. And you know, combined with your technical skills, Dale, you know, this was a very good decision.
Yeah, that was very powerful analysis. I love when there's confluence between different methodologies of people whose work I respect. It gives me more conviction on the trade. When I was younger, I only wanted to know what people were thinking so I could fade them. That's when I traded from the ego. Okay. You just want to be right. Now, I just want to make money and collaborate and make people better and educate people so they don't get run over like all of us had at one point.
Well, that's kind of the ultimate trading journey, isn't it? Right? It's like you think it's about, you know, making buying and selling decisions, but it's really a battle with your own ego. And can you park it long enough to you know, manage your risk and do all the good habits that we know we need to do in order to be consistently profitable. So yeah, you touched on a great theme there, and I think it's one that all traders engage in as they go through this process. But yeah, so that's natural gas. What else am I looking at? So this might be a bit of review, but here's my NQ futures chart. You might find it a little busy, but we've got, you know, again, the same key planetary lines that we're aspecting on the Buttonwood date. We've got Earth Chiron, we've got Sun Geo, and we've got Mercury Helio. And you can see how all three of these were engaged at the low down here on March 30th. And this is what I would call a round trip. We've gone basically end to end from this cluster of lines to this cluster of lines. So I would not expect this to keep going for another cluster of lines up to 34K. My expectation, especially since we got like a world record setting momentum down here at
look at that divergence. Good eye.
Yeah. Like, and this is my new.
I think we topped yesterday. And if you go to the 4 hour, S&P's retraced almost 78%. Dow made a new high, and NASDAQ's about at the 61.8 level. So that's a change of character in the market. Doesn't necessarily mean that we're going to start going down tomorrow, although I think there's a pretty good possibility this is the beginning of a correction. But it is interesting that NASDAQ brought up the rear today instead of blowing everything away on this retrace, on this pop. And it's a red number. I don't know what the market will like. Will they like a weak number, or if we get a strong number, they'll be afraid of Warsh on the 15th? I'm not sure, but I like that cycle that you have coming up on this chart in July. If this is the beginning of a correction, that a lot of people that were looking for highs in July, you had that cycle pushing out into July like a three waver that you just had up. There you go.
Yeah.
And you get the down, then you get the up, and then you get another down into late June.
Yeah.
Right?
Yeah. So this is the speed index, and when Jarrid was talking about macro events, in the middle of June, this is kind of the peak of geocentric speed, topping around the 16th, 17th, and then it drops down. These lows over here are usually Mercury retrograde. They're about 90 days apart as Mercury does its retrograde thing.
Maybe it's a secondary high up there on the 16th. Possible.
Yeah. So I don't look at this as like a price indicator, but I do use it to identify when Mercury is going retro. And you can see over here it's making a deeper low. This is when Venus goes retrograde. So looking out into the October-November timeframe, I think that's when we see it. In my opinion. There's no sure thing, but Venus retrograde is typically a 10 to 20% correction. So that's what I think is likely as we look out into the fall. But it's real interesting. If you go back and look at, the last time we had momentum this high, this is counting the number, this momentum indicator is counting the number of ATRs above the 21 EMA. Okay. So because it's ATR based, it's got that volatility expansion baked into it. So we're a whopping 4 ATRs above the 21 EMA. That was the peak over here on May 8th, right? So question is, does that mean a top? Well, obviously not. The last time we had something that high was actually December 1999. And this teal analog is what happened after that, right? Things just kept drifting upward until the March 2000 high. So, the bottom line is it takes a lot of time to kind of release all of this energy that was just blasted into the market. And the last reason why I think we're going to continue to kind of coast upward in spite of all of the news is where we are in the Venus cycle. So if I turn on my little time trades indicator, I'm going to turn off some of these lines so you don't go mad. But we're in the fifth interval of the Venus geocentric cycle. So what this means is that Venus is coming back towards Earth at high speed. So it's these moments of high relative speed to Earth, okay, in the geocentric cycle where you tend to see trends. And this is where early bears get cooked, is in time periods like this, right? This is where, you know, the irrational bear or bull market tends to continue. Like this is the same thing happens in interval 2, and this is when Venus is heading away from Earth at maximum speed. So, like, I think it's a great environment just to be kind of selling puts. Like, wait for a pullback, sell some puts. Like, I don't think there's a heck of a lot of potential upside. And the way to interpret this analog is it's not a literal, like, hey, it's guaranteed to go to 33K by August. That's not how to read this. But it just gives you an indication of kind of the bias to hold. So yeah, when we get into July, August, I think that's the time to, you know, start getting a little critical. There's going to be some good pullbacks here. You know, the analog from 2000 has one coming up mid-June again, right? So right in that cluster of news. So, but I don't think it's time to go to flip super bearish on indices just yet.
Yeah, well, I'm thinking 28 to 26,000 in that. But, you know, I wanted to bring up to you guys because I haven't seen a period of a static dollar this long in time. And I've been long, it's like a Rip Van Winkle trade. I could have gone to sleep. I could have taken a nap for 6 months. But if we get through 99.5, I think the dollar decides what everything else does. And I look at the 10-year, and, you know, if we get a weak number, maybe it pulls back to 434 or so. But I'm looking for over 5% on the 10-year before this move in yields is over. And I think that'll get the dollar going to take out 99.5 and then par and a half. And that'll just provide less liquidity to the market, because right now it's a neutral. It's not, it hasn't broken down to make things more liquid, but it hasn't broken out. So I think the dollar's a key. And what the event may be, because you could almost see it coming, is Ukraine making gains, and desperate men do desperate things. And, you know, we could have NATO involved in this war going forward. And if I were you, just, you know, a simple person, do you want to hold paper in Europe while that's happening, or would you rather have an ocean between you and that financial system? That's simple. So I think that could happen to take the Dixie to 103.
Dale, I want to show you my dollar chart and see what you think about it. And then I'd love to see yours too. Because I was listening to you when you were on Maggie's show.
Yeah.
And I was looking at my own chart here. So here is my dollar analog right now.
Wow, it's still going down.
It's bearish. Now, my caveat is this, though, and I was going to say about Blair's analog too. I have flagged a cycle inversion zone around the up through the 19th of this month because of Uranus square the nodes. I find that the highest probability place where I get what I call like an inversion or a deviation from a cycle projection or an analog that I'm using is during either eclipse season or the midpoint between eclipse season. And that just passed on the 25th of May. And I did see a few cycle inversions, but not as many as I anticipated. Bitcoin was one of the cycle inversions that I saw. But the dollar, I am suspicious of a cycle inversion. And here's why. We are due for the 20-week cycle low on the dollar the week of June 15th. And so that means we're inside the time band for that low. Dollar tends to run a pretty true 20-week cycle. Sometimes
look at that sideways. It's like an EKG of someone in a coma.
Oh my gosh. I call this an anaconda squeeze.
Okay.
It's just,
I feel it.
going on forever.
Yeah.
And the other thing I noticed on the dollar is that the dollar, if you look at it on the monthly chart, it has a tendency to do this, to form these bases of support that look like a bear flag before it takes off and rips, right?
Yeah.
So, this one, not as many months, but I mean, this is the monthly chart here. So this was 1, 2, 3, 4, 5, 6 months sideways here before it takes off. So, we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months sideways at this point.
Yeah.
But the 20-week cycle low is due, and the dollar is pretty trusty with its 20-week cycle low. It can run a couple weeks longer short, and so that puts us in the time band, but this is not going to be the low here. So here, let me quiet some of these. I'm sure
you don't see any breakout over par 50.
I think that we will, but I think we have to come down and put in the low first. So the low we could hold 97.62. That's possible.
Yeah.
Right?
I know someone you can make a case for 98.10 without it taking out that low.
It could hold that, or it could come down and retest this. I'm not really, I think, but we have to see a pivot low, which means we need to get a lowest close here. So we're going to have to come down and at the very least test that 97.62. Because in my opinion, and anything's possible in cycles, could that be a very, very short 20-week cycle low right there on May 4th? It could be, but dollar doesn't tend to do that. I mean, it's happened. I'm not going to say it couldn't be possible, but it's...
Well, I mean, the whole world's bearish a dollar. All you hear is about the debasement trade and the end of the petrol currency. So I'm really not comfortable on the bearish side of the market. I will be once they clean out the bears over 101.5, because I am longer term bearish a dollar, because I think Warsh is going to implement yield control. Yield curve control.
Yeah, I think that's probably likely in the long term. I think if we get down to a very precise low, I think I'm looking for a weekly pivot high next week. See these tags here? These tags signal when we're going to turn. So I'm looking for a pivot high, most likely next week. And then the low should probably come in around the solstice is my anticipation. Or if we run long, then this right here, this true node 14.5 measurement is a very strong pivot. Look back here. Here was our true node 14.5 here. It doesn't hit that often. And when it does, it's usually a really strong pivot with multiple weeks of follow through. So that's the time band I'm looking for a low, I guess, in the dollar. Before then we would, move up. So I don't know. We'll see. But
we'll see.
But I mean, also the daily chart is like, it's like squeezeception, right? Because you got to squeeze on the daily chart too.
Yeah. Look at that though. I mean, it's, they couldn't break it with all this risk on.
Nope, but couldn't break it either way,
Yeah, but they couldn't break. This has been a risk on period since the end of
yes. March. Yep.
And normally that would be bearish. The dollar would be going down, not up. And since the end of March, it's headed up. To me, that doesn't look bearish. It just looks like a sideways triangle.
Yeah.
And that once we get through 9.5, par and a half is next. But under 98.80, that was Friday's low.
Yeah.
I'm with you. Okay.
Yeah. Yeah. I mean, clearly this range, the break of this range is what's the top watch right here.
Yeah.
On the daily, right?
Yeah.
So
and just to add a macro comment on top of this is, some of the strength in the dollar has come from foreign countries so last month was one of the largest selling months of U.S. treasuries by foreign holders that we've seen in the last 2 years. Because obviously higher oil priced in dollars, so they're selling treasuries to pay for more expensive energy. So obviously, you have a risk on in the U.S. stock market, mainly driven by AI. But then you also have a strong dollar driven by higher energy costs for foreign nations.
Okay, there's also some dollar shortages in the Gulf states. Can you imagine that they haven't had the same cash flow for about 90 days at least, let alone repairs? So I think it was, they've asked for cash swaps from the Fed for loans to bridge the loss of income over the last 3 months. So they're not real liquid right now.
Yeah.
And they were really a big source of liquidity for driving all kinds of investments. And I think they're going to have problems with liquidity for quite some time whenever this ends, and they have to, do some reconstruction. And I think there's always going to be an issue with the straits for a while.
That's that's a great connection.
Even after the war.
Dale, is the connection with the sovereign wealth funds. Yeah, that's a very astute observation. And Jarrid, to your point about other countries kind of generating liquidity, that was also I also heard that Turkey was selling gold for the same reason, basically to help fund energy purchases. So I think that's also like it's just fascinating how all these things are connected, right? I mean, we all know they're connected, but sometimes it's like you're putting together a jigsaw puzzle in the dark.
Yeah,
and I don't think this Bitcoin break is wrong, because all the you listen to Michael Howell and these liquidity people, it's tightening out there, the SOFR rate, all this. So I think that Bitcoin's right, and there's going to be some type of mean reversion trade in the market, not to the same degree, but I still think people are saying, well, it doesn't correlate anymore. There are things that can, correlate, and then they break apart and the correlation breaks, but they usually reconnect.
Yeah.
It's not like it's gone. That correlation is gone forever.
Yeah.
It might be giving a true message about liquidity here. So countries aren't only selling gold for liquidity, that may be behind the big break in Bitcoin.
Yeah, because in addition to the higher energy costs for foreign nations, you also still have a problem with private credit funds, both in the US and Europe. And you have continually new funds coming out saying they're stopping redemption. So, that's why I'm not shocked that you're seeing crypto down and metals struggling, because those are probably the top two places they're having to go out for liquidity. And US stocks, AI is the last place they're hiding their money for now.
Right, for now.
Yeah. Well, and the Astro connection with Bitcoin is Bitcoin's in its enemy year according to Chinese astrology, right? The last time it was in its enemy year was in 2014. So if you want to look at what that means for Bitcoin, there's a good analog to throw up on the charts. Just Bitcoin in 2014, it was ugly.
Yeah, I mean, I don't know if we're going to repeat 2014 personally. Do you have that analog you want to share, Dale or Blair?
No, I don't. No. But
just talking about it.
Pull back to 2014 and.
Yeah, this is the Bitcoin Venus analog that I use. You can see these track with an extreme amount of precision on Bitcoin.
Oh wow!
And I've been saying we're range bound. This is part of what I was saying is I really don't think we are going to break the low at 60,000 ish. It's 59,930 on this chart. Could I be wrong? Sure, I could be wrong. But could we wick below it and bounce? Yeah, I think that's viable too. The other thing that I have to give a huge shout out to my friend Juan Villaverde. If anybody doesn't follow him, he is one of the better analysts that I know out there. He combines astro, macro, and technical, and he's a Bitcoin, he forecasts multiple markets, but he's a Bitcoin specialist. And he took this global liquidity index and he offset it by 84 days. And he found that this thing tracks with precision throughout all of time. It doesn't invert. It doesn't do a lot of the things that cycles tend to do. And as you can see, here we are just tracking with this extreme amount of precision. And it doesn't always track the amplitude, right? Although it is right now. But this is telling us that we're looking for a low where
Solstice.
the solstice. That's right. So, that is coming up for me as a major, major, major point across all the assets. And the way I like to trade that as far as like actionability goes is like I pick my top, my top theses, like the sectors that I have the most, confidence in. And then I like to trade long. I prefer the long side, at least in a bull market in general. So I look for what's putting in a pivot low, and then I look for long setups, and then you just patient and let it trade out. I mean, that was basically driving the analysis, at least a large part of the analysis behind the March 30th low, was that we were in that time band for the equinox pivot, so
you've been on point on many things, Margo, lately. Very, you've been really on point.
We'll hope it keeps coming.
And Margo, I recently watched your great interview with Alan Reminick, and he combines GAN and astrology, and he sees a lot of similarities astrologically to the summer of 1996. And if you go back and look at the S&P in June, July 1996, you had about a 10-11% pullback, and then you took off and you kept going higher into the end of the year.
I like that. Because that would take you to
June 1996. Here we are. Here's June 1996.
It would take you back to 7,000. 6,900 is halfway back in the S&Ps from the late March low. 71 is my first target.
June 6th. So that would put us peaking. This week. There's an argument for me from my system standpoint that we could peak this week. So this is the analog for the NASDAQ I'm running. And it does signal that we could peak next week on the analog. And then if I throw the ruler pivots, and these are all time trades tools that I use to measure cycles as well. Oh, you know what? I've got the wrong. Hold on, I've got the wrong.
And Margo, while you're adding your indicators, just to add some more macro context, tomorrow is non-farm payroll, U.S. non-farm payroll. So that's typically a big news item of the month that can move markets. You just got to see how it comes out. And then if tomorrow doesn't do anything, obviously anything Iran war related, although the market has become desensitized to a lot of the headlines over the last couple of weeks, but you never know with that. And then next week on Wednesday, June 10th, you have CPI, so consumer inflation. And then the next day on Thursday, June 11th, you have PPI, which also can move markets. So those would be tomorrow, Friday, non-farm payroll, middle of next week, inflation metrics, and then obviously we already talked about the following week with the central banks and the option expiration.
Yeah,
don't forget go ahead, Mark.
Go ahead, Dale.
D-Day, June 7th.
Well,
the anniversary of D-Day.
We're going to see how it shakes out. I started picking up pivot measurements on the NASDAQ really acutely the week of May 11th. And we did get some of that. That's when we got our short period of daily consolidation. And then we continued higher. And so we've got a weekly pivot harmonic comes in next week in my cycle measurements. Okay. And then we've got another one on the week of the 15th and another one on the week of the 29th. Plus we've got the solstice in there on the 20th. So that looks like we may get some volatility on the NASDAQ. Yeah.
Just pull up so that our viewers know, convert that to a 4-hour chart.
Okay, here. Let me split it over here because this is.
So they see what I'm talking about.
Let's see. Or do you want to share your screen, Dale? Do you have it?
Yeah, I have it.
Yeah, here. Why don't you share?
Okay.
Yeah, and again, on that week of the 29th, you're going to get on the 30th, the quarterly options expiring. And then also the last 2 weeks of June after monthly OPEX is what they call the potential window of weakness. So the option market makers and dealers are not in the market supporting any dips. So that's where you hope you have a 2-week period of potential declines in markets.
Okay, well, here's a 4 hour. We've been diverging since May, looks
Oh,
like
May
the
11th.
7th.
Look at that. There's that date. Ha,
Yeah, so we've been
very
diverging
cool.
since that date.
Nice.
It's my view that yesterday he had a 5 count decline, and
Mm-hmm.
that so far all it's done is retrace 61.8% compared to the S&Ps, which came off of 78%, and the Dow, which is kind of a sign when people are worried, but they want to be in the market. They're buying the blue chips, and that's made a new high. But there's, a lot.
Yeah. I think then, and then this brings in kind of the conversation about rotation, right? Because what my thesis has been is that while tech consolidates, we're going to see specifically, I'm long healthcare, and that was something that we've been doing in my Discord for a while. I think that we're going to see healthcare and perhaps financials as well. Take the lead while tech sees some volatility and consolidation. What do you guys think about that? Oh, Dale, you're muted. There you go. Oh.
You read my mind, Margo. I was thinking healthcare while you were talking about that.
Oh.
Yeah, I do think there's going to be a rotation. And that explains why I think the indexes will continue to float up, but under the hood, yeah, there's definitely going to be a changing of the guard there, and it's the big variable in my mind is how do these tech companies fund all of this AI spend, and yeah, there's some big questions out there about the ROI of artificial intelligence. Are customers seeing it? It's the prices are high. There's a ton of debt committed to the data center build out, and tech companies, frankly, don't have a lot of experience in managing debt. They have a ton of cash historically, but it's been an asset-free environment for decades, forever. And now they have to take on debt like a real business does. So there's going to be definitely some moments of doubt and probably a few headline failures as certain companies get overextended, right? With this data center build out. Yeah, it's real interesting to watch. The sector that I seriously do not get in the midst of all this is nuclear. Like, I know a lot of folks are keen on nuclear, and there's some strong like I think Octo has been very popular on nuclear trade, but the fastest nuclear reactor built in the last 30 years has taken like 5 years to just get constructed. And that's just simply way too slow and way too expensive.
Yeah, therefore natural gas.
Yeah, yeah.
That's a bridge.
And and along those themes, I think batteries and renewables and fuel cells like Bloom Energy, that's been a trade too, because that's the fastest, cheapest way to get energy. And it's interesting when you look at kind of the transitions in the energy business. And right now, there's Team Molecule and there's Team Electron, and there's a war between these two, right? And Team Molecule, of course, is on the oil and gas side. Team Electron is basically the renewable side, and the part preventing renewables from getting traction has been storage. But in the last 5 years, that's been solved with utility scale batteries. So it really looks to me like Team Electron is getting a lot of traction here, and it just simply has a unassailable advantage because there's zero fuel costs. So the whole data center build out is a very interesting test of this whole thesis. And yes, on the molecule side, agree with you, Dale. Natural gas is the cheapest, fastest access, but you still gotta build the plants that'll turn that into electricity.
They're buying coal right now.
Oh,
right?
me too.
Peabody, are you buying coal?
Yes. Yep.
Right,
Peabody is the BTU is
Yeah.
the top.
You know,
one.
there's going to be a complete shortage of coal on Christmas this year. Do you know why?
Because everybody's been naughty.
Everybody that hasn't been kind to people are going to end up with a lump of coal in their stocking.
Yeah.
And me too. Okay, me too. But that's when I'd be looking to sell your long Peabody positions because Santa, he's going to be dropping lots of coal around this country and the world. That's my Nostra Pinkard call.
I like it. That I think I picked up coal as near a cycle low when I was running some cycles last week.
Yeah, it looks good.
And then Margo, on your rotation comment, Jem Carson has been out saying, and he calls it the last 2 summers. He calls it his summer of George. So the option dealers will pin the indexes, and so the indexes will kind of go sideways in the summer. But at the individual stock level, you get major dispersions and a lot of volatility. And yeah, the leaders up into the summer typically get rotated out of, and then you get the the sectors that haven't done so well get a bid. So
Well,
yeah, he would
that's
agree with
perfect.
your comment about rotation coming in the summer.
Yeah.
I like it.
And maybe it's the semiconductors. Remember, a lot of people, high risk guys, were doing the pair trade, buying software, selling chips. And they did okay on the buying software part, but they're, underwater on the selling chips. But that could still continue to revert to mean a little bit this summer.
Yeah, some interesting stuff I was thinking about is gambling stocks, like DraftKings. It looks terrible. I mean, it's an ugly chart, but Jupiter's going into the sign of Leo, and Leo rules gambling and gaming. And so I'm curious if we'll see some reversal there.
Yeah, they've had a tough year because there's been concerns that the poly market and Kalshi, those betting markets, they are going to be allowed to get into sports betting.
Yep.
And so that's what's kind of hurt the DraftKings and the casinos a little bit.
I bet they don't. I'm kidding.
Well, yeah, there's been a lot of lobbying power from the established player side did not let that happen. So I would agree. I think the odds are low.
Yeah. You don't go up against Don Corleone, right? Anyway,
awesome, guys.
Great. Yeah.
Put another month on the books.
Yeah, an hour flies, huh?
It sure does. Yeah, thank you, you guys. This has been so great. Everybody want to just tell the viewers where you can find each of you?
Sure, I'll go first. Time-trades.com, and I'm on X as well at TimeTrades1.
YouTube, TradeGate Hub's YouTube channel, their Discord room, and on X, I'm Forex Stop Hunter, and I know where your stops are.
And you can find me, I'm the economist in the Trade Travel Chill community. And then I also hang out in Margo's Discord and I join her for monthly AMAs.
Awesome. And everybody, please don't forget to like and subscribe because that helps me keep doing what I'm doing. And you can find me in my Discord on Twitter/X. Or you can go to my website and book individual astrology reading with me if you'd like. And that's margoamala.com. All the links will be in the video description below. Until next month, everybody, have a great one.
Adios.
Bye.